Yo, what is going on, everybody? Welcome to day 3 of the Nick Graves Trades Bootcamp. Today we are going to go over how I read the charts going into the day, and basically just an easy and common way to read the charts before your market open, get a bias, kind of look at everything in literally just 10 minutes. I'm going to give you guys kind of all like the cool details on what I do, how I use specific things, how I find my levels and stuff like that pre-market. I hope you guys are enjoying the videos and everything. What I want you guys to do right now, before I even start with the video, right now, make sure you like the video. Helps push it out to more people. I want to spread the education to more people, and also make sure to comment. Whether it's something like saying what's good, I'm learning, I'm journaling. Like, just make sure you drop a comment. It helps me out, helps you guys out. But yeah, that's really all I want to say. Let's get into the video. So first off, daily bias, stuff like that, reading the charts, reading the markets. What do we have, right? Higher time frame always holds more power. Okay? Higher time frame always holds more power. So going into the week, I'm always going to start on the higher time frames. And this week should be very, very clean, and we're gonna kind of know what we want to do. So right now, what I taught you guys last video, I'm on the weekly time frame right now, guys. Weekly. What do we have right here? We have a fair value gap on the weekly. And look, we're already getting a reaction. And this was a week we dropped over 1,500 points, over 6% in a week. So we have our weekly fair value gap marked out. And again, higher time frame holds more power. So we're most likely going to react off the higher time frames, right? Now we go to the daily. What do we have on the daily? We have a liquidity right here paired with a daily fair value gap. So when market opens today, we're going to see either one of two things. Market's going to open and we're going to pump up immediately after mitigating this daily fair value gap right here. And we're going to go higher, or we're going to dump down a little bit more and dig deeper into the weekly fair value gap and mitigate like this daily fair value gap here, as well as like maybe like this order block or something like that. Again, all the concepts that I taught you, you guys last time. But again, we have to go down another 425 points for that. What I really am looking for just here, again, this is just how to look at your charts. In this case scenario, right now, where the week is, if this is any week, we have an unmitigated daily fair value gap as well. So what can we expect, guys? What can we expect? We have this daily fair value gap right here. We're bouncing off a weekly and a daily fair value gap right here. And what can we expect? A reversal somewhere up to here. And in this area, we're going to kind of look for some sort of like reversal, right? Now we have our daily levels marked out. And again, I'm just showing this week, for example. You have to go back and do this on any week. Now we go to the 4 hour. What do we have on the 4 hour? We go back over here. We find kind of like our levels where we drew the dailies out. And now what do we have? Boom. We have a couple other things. We have liquidity. I'm going to teach you guys that soon if you guys don't know what that is. Right here inside of a 15. We scroll down a little more, and here we have another 15-minute fair value gap in here. And then we have another 15-minute fair value gap in here. So now this is kind of getting into PD array refinement a little bit sooner than I wanted to, but this is kind of just how I mark up the charts, right? So this is kind of how like I'm able to read the charts, right? We have like the higher time frame. We understand that it holds more power, right? So what can we expect from our lower time frame entries? Those are like our more like precise entries. But again, this video is just about reading the charts and where the price action wants to go. Again, I have all these levels. We're on the daily time frame. We have unmitigated daily fair value gaps that haven't been tapped into yet. What can we expect? We can expect some sort of mitigation and then a pump up and a reversal to here. And now we go to the hourly. You can do the same thing. Again, like it's just like time is fractal. If you guys don't know what that means, time is fractal. So right here, if we're on the 1 hour, I mark out like, let's say here to here, right? This high to this low. This is a big fair value gap. Now, if I go to the 4 hour, what is it here? It's another big fair value gap. If I go to the daily, again, what is it as well? In here, it's a big CSD and a fair value gap above. Time is fractal. You guys have to understand that. In one 4 hour candle, so right here, there are 4 1 hours. In 1 hour candle, there are 2 30 minutes. In 1 30 minute, there's 2 15 minutes. In 1 hour candle, there's what? 61 minute candles. So you guys have to understand. Like for example, like I'll show you guys kind of what I mean by time is fractal, right? I'm gonna delete everything. So in this 1 hour candle right here, there are 61 minute candles in here. So look, if I go to the 1 minute, look in here, boom. from the start of the hour from 13 right here all the way to 14. This low right here. So this space from here to here is the hourly. In 1 hourly, we have the wick. Remember, guys, this is the wick. We opened here. So if you guys ever heard of OHLC, open here, high, low, close, right? That is how the hourly is formed. So understanding that time is fractal, that helps out a lot, guys, because that's what helps you get like your levels. It's what helps you read the charts. But this video is just about reading the charts. I kind of like dug a little bit deeper into other things that I didn't want to, but again, you guys are still learning. So I didn't want to dive too deeply into anything too crazy. But understanding like our daily bias and like kind of how to market the charts. So like last week, what was I looking at? Right? So 9:30 open. We kind of have like this anticipatory level that I had. I had a 15-minute fair value gap that was unmitigated right here before the market opened. I go to the 1 hour. What's that 1 hour? It's an order block. Order block wick. 30-minute. What is a 30-minute? It's a 30-minute fair value gap. 5-minute. What's inside of the 15-minute fair value gap? Probably more 5 minutes. And you see here we have a 5-minute. We perfectly go into the 5-minute and then reverse off of it, right? And this kind of gets into PD rate refinement, but also at the same time, this is just kind of how I read the charts. So again, kind of to recap this video, this video is more simple, right, than a lot of videos that I've made. The higher time frame holds more power. You guys can even go to the yearly. Look at the yearly, guys. We have this yearly rejection block. You can literally use a yearly rejection block. Obviously, you're not going to enter off it hitting it, because if you enter off it and it hits it, you're probably going to go into like 4,000, 5,000 points of drawdown, and we probably don't want that. But inside of this 12-month rejection block, the year rejection block, what do we have? Oh, what's that? A monthly fair value gap. This can be some sort of like anticipation for reversal. And I'm full porting my entire money on longs once we hit this level, by the way, guys. And then we go to the weekly. What's in the weekly? Again, more levels down here. We have an unmitigated new week opening gap that we're probably going to go after, guys. Like you can expect a big dump. And this is just how to read the charts. This is just a beginner level of how to read the charts. And you can even swing trade with real life money. We go to the daily. What's the daily? The same stuff. Oh my gosh, this level looks so clean. Liquidity right here, paired with a daily fair value gap. Like it does not get any more cleaner than this. Look, boom, the bottom of this wick, boom, boom. We can expect price to come down here. Like this is just all about reading the charts, guys. And this is just a beginner level of how I read the charts, how to read the charts. Again, start on the higher time frame, see what you guys are looking at, see what we have, see what kind of PD raise we have, like I taught you guys last time. In this case, in this chart that I'm looking at, we have an unmitigated daily fair value gap, but we're already 600 points below it, so we can't really expect it to go up until, like, you can expect it to be a breakaway. Maybe expect us to come down here. Like we're just gonna probably dump off, but we finally broke out of the range. We closed below this low. Now what can we expect? We can expect all of these unmitigated high time frame PD arrays to get respected, and then we're gonna come here and then pump up probably like 5,000 points. But yeah, guys, that is all I have for you guys today. Hope you guys enjoyed day 2 of the bootcamp. Again, like, comment, subscribe if you guys have not yet. I appreciate you guys. I hope this is really helping. If you guys have any questions, feel free to DM me on Discord about anything. I'm here for you guys. Anything you guys need, just please let me know. Any questions you guys have about the videos, let me know. Love you guys. Appreciate you guys, and I'll catch you guys later. Peace.